So let's turn to the recession that we're living today. And before we get into it, it would be really helpful to understand the concerns and challenges being faced by those in attendance. So we're going to run a quick poll. So Danielle, can you change screens for us? All right. So we have an app called Menti, and what you're able to do with this is to go to menti.com, use the code that's up here 170821, and just enter your thoughts. What do you think are going to be the biggest challenges for your organization in the next year? And then when we start to get into the discussion and into the Q&A, we'll be able to go back and bring up your thoughts and bring up your comments. And so, again, menti.com, and there's the code 170821, and we'll come back to that in a little bit. All right, so I am going to, Danielle, can you give me control again? Awesome. Okay. All right, great. Hopefully that worked. All right, so just a bit of background first here on the current recession. It officially started in February. Peak unemployment hit 14.7% in April, and GDP. This is the estimate that came out last week. Is now for Q2 expected to decline 46.6%. And just for context, this GDP decline is unprecedented. In the Great Depression, GDP declined 26.7%. So the numbers here are pretty staggering, and I think everybody knows what led up to this in terms of COVID and the stay-at-home orders and the quarantines. So Roseanne and Bob and Howard, how is this one different?
Yeah, so I mean, you're outlining right there some of the ways that it's different. I mean, it is very different. The element of a pandemic introduces a level of personal and social anxiety that goes way beyond economic concerns. And this time we have to think about our health, the health of our staff, the health of those we love. I mean, it's a very different level of concern. The restrictions that on actions that we took for granted in terms of our ability to conduct commerce and interact with each other significantly impedes any efforts that companies are trying to make to reduce the economic impact or capture new opportunities. We can't look to traditional economic indicators to know when this is going to end. We don't know how to predict the behavior of the virus, and in this case, the actions of governmental entities at all levels that can help us return to some normal activity. So I think the level of anxiety and uncertainty in this one is much, much, much higher.
And I think the challenge here is which everybody can see, and everybody on participating in this panel is seeing it, is how are you going to do business going forward? I mean, that is a $64,000 question. Is everybody's been at home, and everybody's, I think, for the most part, figured out how to do business remotely. But the question is, as things start to come back, not to normal, but come back, how are you going to do that? I mean, are you going to continue to operate remotely? I've got a couple of investments where the companies are saying, we think we can make this work. And I've pushed back and said, I don't think so. I think, at minimum a hybrid, where people come into the office at some, periodically. But I think to go from being a company where everybody's in the office and then, and doing selling and technology and managing and all those kinds of things, and then all of a sudden revert to being a remote business, I think you lose a tremendous amount. I think people are going to have to figure that out. That is a big challenge. How do you run your business going forward? How do you get your customers going forward? Because you're going to do it remotely for the most part. There's very little air travel, all those kinds of things. So I think it's much different and much more challenging.
Yeah, this one is tough. Maybe it's always tough when you're in the middle of it and you don't know what the ultimate outcome is. Looking back on the .com and Great Recession, they're behind us. So you sort of feel there's great uncertainty with this. I mean, is it ending? Are we just starting? Are we in the first inning of the first wave, or is there going to be a second wave? I think what's shocking about it is the speed of the shutdown and the depth of the shutdown. You had neither of those, maybe in the history of the country, where the speed and the depth of it was as severe as this one. And the fact that it affects everybody, every person and every business, every one of our portfolio companies, some more than others, has been affected by this. So I think that's the great difference. And is it worse? It's certainly, the intensity is worse over a short period of time, but let me know where we end up in 6 months, a year, or 18 months, and then I'll tell you how bad it was. It's just, I don't know. I mean, we've got 76 people who haven't been in the office since March 10th. We have our Zoom calls, but how do you close a new deal? I'm impressed, Bob, you nailed one virtually. We're afraid of that. We've closed one investment since March 1, and it was a company we had known for 6 months and met the team, and was just sort of wrapping up some things. So I think you're right. There's going to be new ways of working. One of our CEOs, who's had a very centralized view of the world, now is thinking to have more locations, fewer people. And his comment was, this is going to open up my recruiting aperture so much more greatly than before. So I used to think location, do I need a So I think there's a lot of good and bad that can come out of it. Some of us in the old school, the three legends here, may say it's got to be in the office. I think it's going to be some kind of mix that will eventually evolve that'll work for everybody. What that looks like, as Bob said, we have no idea.
I think also this one is going to force changes in industries across the board in terms of how they do what they do, not just individual companies, but you think about the whole system for public health, delivery of public health and access to public health. Major issues like that need to be rethought and restructured. That's going to affect current companies, but it's going to open opportunities for others as well.
I do think.
Howard,
go ahead.
I'm sorry. Go ahead, Bob.
I do think that the biggest challenge is going to be to the C-level folks, many of whom are C-level people on this call, because I think staying tuned into what's happening inside the company, what's happening with your customers, and I think it's all about communication both ways. Making sure that people know that you understand their issues, whether they're customers or employees, and you're trying to work with them and trying to sympathize with them and trying to help them. And then you've got to build confidence that way in both your customers and your employees that you are on top of it. This is not a time to be a distant C-level CEO type person.
No, exactly right. And look, I think one of the things that people are underestimating and looking at this issue of how do we work is when you're in an environment where you're sort of together a lot and seeing each other a lot, there's so much spontaneity and good ideas that come out of that you don't program. You can't say, let's have a meeting. It's just somebody walking into your office and having a dialogue that wouldn't otherwise occur. And that, for me anyway, as a guy who's been around a while and talked to a lot of people in my firm every day, it's that I'm missing. And I don't know, and I think we're losing out as a firm. And so we have to deal with that. We're trying to communicate better and better. We're having firm-wide meetings. We're doing all the things you should do, but it's harder.
It is. Interestingly, Bob, you and Howard both mentioned remote work, and so we've done we did a webinar previously on how to run a virtual company, and the interesting thing from a management perspective is, Howard, exactly right. It does open the aperture in terms of recruiting, right? And the other thing is that it creates it has created greater inclusiveness for those folks who used to be the one or two that were always the remote guys, right? So now they're not the redheaded stepchildren anymore, if you will. My apologies to anybody who's a redheaded stepchild. but now there's a greater sense of an inclusiveness for those folks who are remote, which is interesting.
Yeah, that's a good point. Yep.
So let's talk a little bit about the portfolio companies that you all are working with. How are they reacting to the recession? How are they reacting to the shutdowns and the work at home environments?
Yeah, so we're seeing our companies being very nimble. You know, they're flexing, they're conserving cash for sure. Some unfortunately have had to lay off staff as they're cutting costs. We're also seeing, though, companies connecting, and we're helping to facilitate connecting with each other to shift staff. So in cases where a company is laying off folks, but another company is actually scaling up, we're sharing staff, we're shifting staff over so that we're not losing that talent and there's opportunities for them. If they're raising capital, as was said earlier, they are pitching virtually and trying to find ways to grab the attention of investors and folks that they want to sell into. We are seeing our companies take advantage of public funds where they're available, a lot more at the local and state level where they're a little bit easier to access and simpler. And then finally, we see companies pivoting and attempting to redirect their products and services to address the new needs that the pandemic is creating and reaching out to government and corporations about their solutions. So we're seeing some doing extremely well, and some pulling in, and some unfortunately are going to have problems.
You know, Roseanne's exactly right. But I mean, it affects companies in different degrees. You know, we have a company that helps pharma and life sciences companies do their clinical trials. They're doing great. They just had a record second quarter. There's an even greater need for trials. They know how to handle trials virtually to some extent. So there's a healthcare company that's doing great. But the offset is, you know, we have two businesses between 100 and 200 million in revenue. One an ophthalmology business in the southeastern part of the country, and one a dermatology business with 55 clinics in New York Metro. Both are, you know, one will do 120, would have done 120 million, one would have done 170. Both were 100% shut down, you know, in March. And how do you go from that kind of revenue budget? Those are budgeted numbers for 2020. How do you go from that to zero, or maybe a little bit of telehealth? So every team has had to react differently to the situation, but almost uniformly, we've seen, you know, rifts and furloughs, and no bonuses are being planned. One of our CEOs who's running a $700 million business took his salary to zero. We didn't ask him to, we just took it to zero. But many teams are doing deferrals and cuts. 401k matches are being suspended for the moment. You know, non-essential expenses are being kicked out. There's very little travel, obviously. So it's hit everybody, but in, you know, different degrees.
Right. Interesting. So PPP and other federal stimulus programs, were any of your organizations able to access PPP or other federal stimulus funds, and are there any pitfalls that companies should be aware or thinking about with regards to this?
Well, as I mentioned, some of our companies did for sure, and also accessed some of the various counties here in the Southeast launched their own programs, support programs. We launched with the state, Save Our Startups. So we launched a special program for the companies in our portfolio that made it very easy for them to access that support. In any of these programs, the company has to look very carefully at the rules and regulations. Everybody knows with PPP, that's a moving target. So it's important to have the counsel and advice of people who are following this minute by minute to understand what you should do, what you can do, and how to best account for your expenses so that if you're looking for a conversion to a grant at some point, you're well positioned to do that.
Every company that I've got an investment in has been successful in getting that money. But as Roseanne said, it's the next step, because they keep changing the rules, which is interesting unto itself. And to me, being the cynical side of me says this is going to be the full employment act for both lawyers and accountants, because government's going to come in, they're going to arbitrarily pick companies to examine. They're going to find problems, and I think it's just a real issue to be faced.
Yeah, I would just add, for us, it's had limited impact because these attribution's not the right word, but the rules of accumulating your businesses in private equity, we get over 500 people, we don't qualify. So where we've been a minority interest, we've had a little bit. There's a reimbursement, and it's automatic, I think, as it relates to Medicare payments. The government goes into the Medicare payment system, and if you've received X dollars over the last 12 months, you get money. We've got a couple companies benefit from that, but for us, it's more limited.
Okay, interesting. So we back to the poll. We've had a bunch of folks ask questions and respond to the poll. So hey, Danielle, there we go. So here's some of the challenges that folks have asked. So we've got pricing, raising capital, new sales opportunities and pipeline, financial impact on customers. So a lot of great questions. Howard and Bob and Roseanne, do you want to respond to any of these in particular?
Yeah, well, I can respond to the one that asks, is Ben Franklin still investing? And unequivocally, the answer to that is yes, we are. So we are seeing new companies. We do have a sense of prioritizing for our current companies in the portfolio, but absolutely, both through Go Philly, the fund that was that we closed in February, and in our regular resources, we are investing. Also, angels are out there investing. I work with Broad Street Angels, and they're investing actively and have been meeting and have not missed a meeting. So there is capital out there, and folks should pursue it.
Yeah, and I think Bob made the point too. Roseanne and Bob are right on the money here. There's so much liquidity in the market. Bob's got all his buddies and other networks that can put money into companies. Roseanne's quite flush. We're flush. Private equity is incredibly flush. Private equity has so much dry powder. It's waiting to be invested. They got to put it out. So the liquidity's there, and you can raise capital in this environment. Absolutely. There may be some obstacles, virtual or not, and all that, but it's definitely available. I think there were some very good questions early on there, Alan, if we can go back, like, pricing. And I'll tell you this, we have a lot of companies in the software industry, whether it's a license model or a SaaS model, subscription model. A lot of customers have come back on their maintenance or their subscription and say, look, I love what you're doing for me, but I can't pay, every month or every quarter. So we've had to give some reductions. We try to exchange the reduction for a longer term, perhaps on the contract. So there's a lot of issues with respect to perpetuating that revenue stream. And again, if you're selling into industries that are particularly impacted, you're going to have a worse outcome. We have a company that sells software into oil and gas. 80% of its revenues is oil and gas. A third of their customer base has come back for, major reductions on the future maintenance stream. So it really depends on the industry. One thing we've noticed, and hopefully it gets better over time, on purchase, new sales, new bookings, purchaser, the whole purchasing dynamic, the whole purchasing decision got significantly slowed, as COVID hit. So many of our companies had a tough time rallying from a tough, in the software industry, the last couple of weeks are very important of any quarter. There weren't a lot of purchasing decisions being made, even by big corporate America, because they were everyone was frozen.
Right.
So that's slowed down. So we got a lot of headwinds there, which are overcomable.
I think that feeds into one of the really significant issues in terms of raising money, because when you go out, as you all know, investors expect a set of projections, and there's a set of assumptions behind those, and there's also valuation. So I think presenting a set of projections which take into account everything we've talked about here, and it's all iffy, and maybe you present two cases. You present sort of this is the case as we sit here today, we think we might be able to do, and here's the upside case. So you're not totally, hanging crepe, so to speak. But I think your credibility is going to be affected by not going in with some, extraordinary set of projections, assuming that this is all going to be over halfway through next year, and the next couple of years we're going to be back to growing the way we grew. I think that's very unrealistic and affects your credibility. And then the second issue is going to be valuation. I mean, I can't tell you the number of conversations with people that we're talking about investing in right now. Discussion about valuation, are they realistic? And I think as responsible investors, it's not fair or appropriate for us to crush them. But on the other hand, there are things called down rounds. And I think one has to expect there are going to be some down rounds in this environment.
For an existing company, Alan, for an existing company, it's not, and there's some great opportunities today in the marketplace. If you need talent, there's a lot of talent that, may be wondering, why am I staying at this company? Maybe you can grab some talent. And, we live and die by these buy and build strategies, these tuck-in acquisitions. Great time to find companies that are a lot smaller than our company, let's say, that are really struggling. And you can give everybody a home at a very nominal purchase price. Now I'm talking about companies between 2 and 5 million that you can tuck into your $40 million platform. There's opportunities out there that I think these will continue to materialize as these companies struggle with their debt and lack of equity capital. Companies.
So Howard, I won't let my companies talk to you then.
No, well.
No. So here's
evaluation is very difficult. People still remember pre-COVID. There's so much capital out there that it tends to sustain valuations. The one investment we did since March 1, we made some, improvements around the edges, but it was fundamentally the same valuation.
So there's an interesting question. So it's been the decline in the stock market was really rapid, but the ascent has been rapid as well. So you've got an interesting situation where certainly leverage has come way down and pricing has gone way up, and underwriting thresholds are tougher. But when people look at the public markets, like the SaaS markets are back at an all-time high. And so when you think about valuation, how are you guiding folks as an investor? How are you guiding folks when they are looking at the SaaS multiples saying, well, wait a second, they haven't moved since pre-COVID?
Yeah, that's a tough one, Alan. I mean, we have not pulled the trigger other than this one sort of legacy opportunity. And I don't know what the future holds. The market is always a good indicator of the future, but I don't think it's comprehended what second quarters are going to look like. I just don't know. And when you have uncertainty like that, you tend to be hesitant about pulling the trigger or hesitant supporting a big value. But that said, there's so much money out there. I mean, we pulled a company off the market in a nice space where 2 private equity funds and a corporate player wanted to buy this company for X. And we just thought it was about 70% of what we thought it was worth pre-COVID. And we just said, we probably did what Bob said we shouldn't do. We said, no, we're not selling it at that price. It's a good company. We're going to manage it. And we've done okay. And that was in March. We pulled it, so it's been 4 months later or 4 months later. And 2 of those 3 buyers at that time, back in February, March, have now come back and said, look, we want to revisit this thing. We probably nicked you on value too much. Let's revisit it. So they're propping up the old pre-COVID values. Why? Because they have, one of them has billions of dollars sitting in a private equity fund and one is a $20 billion market cap company that says, okay, I got to get back on the M&A side. So you have that, angst there between valuation and liquidity. So Bob and Roseanne will figure that out.